Let's run through 8 companies that posted their earnings this week. Today's lineup will be PayPal, Alphabet Inc., Starbucks, Meta Platforms, Spotify, Snap Inc., Pinterest, and Amazon. I'm Mark Palmer, ex-financial professional, here to help you build wealth. You can find me on Twitter or Instagram at MarkPWealth. Before we get started, I want to make sure you understand that this is not financial advice, it's financial education. If you want advice specific to you, you should reach out to a financial advisor and they can help you out. The first company we're going over today is PayPal. They posted a mixed earning report this week with figures pretty close to analyst expectations. They missed analyst expectations on earnings per share by 1 cent, and they beat analyst expectations on revenue, posting $6.92 billion in revenue for the quarter versus the expected $6.87 billion. PayPal gave a weaker than expected guidance for their 2022 growth, however, citing eBay moving away from using PayPal as their payment processor as the main culprit for the hindrance in their growth. One brighter note, PayPal did add 9.8 million net new active users in Q4 of 2021. Next up, we have Alphabet Inc., aka Google. Some big news and big earnings for the company, beating the analyst expectations in all the main categories and posting a year-over-year revenue growth of 32%. YouTube ad revenue was the only metric that they fell short on. And speaking of shorts, they're still trying to figure out how to compete with TikTok, and right now they're doing so with their feature titled YouTube Shorts. It'll be interesting to see how they continue to grow this. Perhaps the biggest news of Alphabet's earnings report is their announcement of a 20-for-1 stock split. If this is approved by shareholders, then the terms state that shareholders as of July 1st, 2022 will receive 20 shares of Alphabet Inc. stock for every 1 share that they hold on July 1st of 2022. Keep in mind, this isn't just a bunch of free shares being divvied out to shareholders. You would essentially receive 20 shares for your 1 share, and each of those shares will be worth 1/20th of the price of your 1 share that you used to hold. Alphabet is doing this after companies like Tesla and Apple have succeeded with their own stock splits in recent years. We'll see if this brings further demand for the stock and perhaps even entry into the Dow Jones Industrial Average. Quick break in the action to ask you to do me a huge favor, and that is to hit the like button on this video and to subscribe to my channel. Both very quick for you to do, super easy, and they really help me out a lot, so thank you. Next up, we have Starbucks. The coffee giant missed on analyst estimates for earnings per share, but beat their estimates on revenue for Q4 of 2021. CEO Kevin Johnson stated that inflation has taken a toll on the company, with supply chain issues and higher prices holding the company back from beating earnings estimates. He also stated that a resurgence of COVID-19 has caused employees to take a lot more paid sick leave. He's anticipating higher inflation the rest of this year, and as a result of this, Starbucks plans to raise their prices again this year. Moving on, Meta Platforms, aka Facebook, posted their Q4 2021 earnings, and they missed on key metrics such as earnings per share, as well as daily and monthly active users. They did have a slight beat on revenue for the quarter, posting $33.67 billion in revenue for Q4. Another negative piece of their report was their Q1 2022 guidance for revenue, coming in lower than what analysts were expecting them to say. They blame this weaker guidance on Apple's new iOS privacy agreement, which hinders their ad revenue, as well as inflation, supply chain issues, and a general shift to products that don't generate as much revenue for the company as their newsfeed does, such as their Reels feature, which is a TikTok and YouTube Shorts competitor. As the company shifts its focus to the metaverse, we'll see what kind of impact that has on the company as well as the stock. Spotify had an interesting earnings report as well, beating analyst expectations for earnings per share and revenue for Q4. However, they're expecting a slow start to 2022, with estimates of 418 million monthly active users, as well as 183 million premium subscribers, both numbers short of analyst expectations for the beginning of 2022. Spotify's earnings report itself had no mention of the Joe Rogan ongoing controversy on the platform. However, CEO Daniel Ek on the earnings call defended their decision to keep Joe Rogan on the platform and said that he doesn't expect any sort of negative impacts with that decision. Snap Inc., aka Snapchat, posted their Q4 earnings this week, and it was a win. They posted their first ever profitable quarter as a public company. They blew away analyst expectations on adjusted earnings per share, posting an earnings of 22 cents per share versus analyst expectations of 10 cents per share. They're up to 319 million daily active users on the app and are expecting to have between 328 million and 330 million daily active users in 2022 quarter one. Pinterest also had a good quarter four of 2021, posting higher earnings per share and higher revenue than analyst expectations. Both Snapchat and Pinterest were expected to have poor earnings reports after Facebook reported their earnings that disappointed many analysts. Instead, they both blew their earnings out of the water, and people are saying this must now just be a Facebook issue, Meta Platforms issue, as opposed to a social media issue overall. Again, this is just one point in time. Things could change very quickly with these companies. Amazon reported a good quarter four as well, and they posted higher than expected revenue for the quarter. This was thanks to its growing ad business, as well as a 40% revenue increase in its Amazon Web Services cloud computing business, or AWS. They also announced that they will be hiking the price of Amazon Prime. It will now be $139 per year as opposed to $119 per year. This will go into effect later in quarter one. That does it for today's Stock Talk. If you have any questions or feedback, please provide them in the comments below, or you can reach out to me on Twitter or Instagram at MarkPWealth. I'd love to have a conversation. Also, if you haven't liked my video or subscribed to my channel yet, I would really appreciate you doing that. It means a ton to me, and it's super easy for you, so thank you. Best of luck on your path to wealth, and I look forward to seeing you next time.